Welcome back, everyone. And today we're doing a stock analysis on Facebook, ticker symbol FB. So of course, everyone knows what Facebook does. They own and operate a bunch of different social media platforms, and they create revenue by selling advertisements from different companies and or people on those different platforms. So today we're going to talk about why Facebook's been in the news lately, and they have a new product coming out that is going to directly compete with another big tech company. And of course, we're going to go through the financials and look at the future prospects of what Facebook is currently developing. So as always, I'm please going to remind you to like and subscribe. It really does help my channel grow, and we're going to jump right into it. So Facebook's new product coming out soon is called Messenger Rooms. So this is a video chatting competitor to the very well-known brand Zoom. So of course, we all know what's going on in the world right now, and because of this, a lot of companies have shifted to people working from home and telecommuting, using video chats, Zoom, and any other platform. So Facebook wants to get on this, and they've released a new product they announced on Friday called Messenger Rooms. So as you can see here, Facebook pops, Zoom drops on Facebook announcing Rooms, a video chat competitor. So if we scroll down to the key points of this article, as you can see here, on Friday, Facebook announced Messenger Rooms, a video conferencing platform that allows up to 50 people to join a single room and interact with each other. The new product offering will be a direct competitor to Zoom Video and Google Hangouts, two products that have seen a surge in demand as people work from home during this pandemic. So news of Rooms prompted a swift 12% decline in shares of Zoom, the main competitor. So if we move over to the Zoom stock, as you can see here on the one-day chart, they were at a peak of about $180 a share. Then we saw them dropped all the way down 11.8% on the day, around a 12% drop on the day. And then at market close, you can see here it was still down over 10%. And of course, in the gray line here is the after hours trading, and has still seen a little bit of a decline in the after hours trading. So we're going to jump right into Facebook stock. We're going to look at their financials, and we're just going to overall look if it's time to buy Facebook. If people believe that this is the right time to jump in, if this new product is really going to help the stock price surge, as well, we're going to look at their financials to see if they can weather this uncertainty in the market and if they can weather this storm. So as always, we're going to take a look right here. This is the 5-year chart. So of course, Facebook does not pay a dividend. This is not a dividend stock at all. This is completely a growth stock. Facebook is a technology company, and I believe they choose not to pay a dividend in order to keep a lot of money in-house and in order to continue to innovate, to continue to research and develop, and to continue to grow the company moving forward. So in a growth stock, you want to see that nice fast price acceleration. So on the 5-year chart here, you could see Facebook 5 years ago was trading at $81 a share, and of course reached an all-time high around $220 a share. So of course we have seen a little bit of a dip off here, but overall Facebook has seen very nice price appreciation over the past 5 years. They're currently trading at a PE value just shy of 25. And right away, before we jump into the deep financials of the company, we're going to take a look at the 5-year historical average of the price to earnings ratio and see a forward PE of 25, how that fits on that chart. So if we jump over here, you can see this is the 5-year chart for their price to earnings ratio. And if you see their average PE ratio over the past 5 years has been over 30. See 33, 34, 30. We see a little short decline in 2018, but back up to a PE ratio on average over 30. So trading at a forward PE of 25 is below its historical 5-year average. And if we jump over to another platform, this is just the executive summary of Facebook. And if you don't know what Facebook owns, they own very numerous different brands that are all very popular around the world. Some of the big ones are Instagram, Facebook, of course, WhatsApp, and Facebook Messenger. Messenger Rooms, I'm sure, will be coming out of the Messenger app, of course, and they sport a massive $540 billion market cap. So the quick executive summary here shows that Facebook is trading below its fair value, and we'll take a look at that. And of course, it says here, earnings are forecast to grow close to 16% per year, which is fantastic. That's very fast growth. So if we look at the valuation of Facebook currently, as you can see here, this platform says Facebook is actually very much undervalued, 32.7% undervalued. So this platform states that Facebook's fair value per share is currently around $282 a share, where it's currently trading at $190 a share. So if you can look into this platform, this is simply Wall Street, and you can take a look at their metrics they use to get these valuations for fair value. But of course, that's a too deep of analysis to go into about the actual platform. But if you want to trust this platform, then if you look at this, you can see that it's about 33% undervalued right now. And we're going to look at the future estimated growth. And as you see here, 16% annual earnings growth projected, of course, which is very nice to see. That is a very fast growth rate if they are able to actually achieve that rate. And if we look down, we can see the growth on the chart. This is their estimated revenue growth. So of course, this is December 30th, 2019, their last earnings report. Revenue of 70 billion, earnings of 18 billion. And of course, this estimate just shows that they will continue to grow year over year very fast for the next 5 to 10 years. So we're going to jump over to Facebook's actual financials, and we're going to break down the different financial statements to see if they have a strong financial statement, strong financial health, and if they're able to weather this storm of uncertainty over the next 6 to 12 months. We're going to start off by looking at their balance sheet. So I really like looking at the balance sheet first because it gives you a snapshot of the company's financial health at the time of this financial statement recording. So of course, this is going to be year-end 2019 financial statements. And we're going to just look at a couple different ratios and a couple different things I look at when analyzing the balance sheet of each different company. So we're going to look right here, and Facebook has total cash of close to $55 billion in total cash, which is fantastic. That's a lot of cash on hand, and hopefully they'll have enough to pay off their current liabilities, which is exactly what we're going to look at next. So $55 billion in cash with total current liabilities of only $15 billion. So they have over $50 billion in cash with only $15 billion in current liabilities. So they have a lot of cash on hand. They can pay off all their current liabilities essentially overnight and still have a lot of cash to continue to operate their business. So their current assets are very healthy. If you look at their total assets, so this is the current and long-term assets like combined, you can see here that they have $133 billion. And one thing you want to look at here is to see if they're increasing their assets year over year, which as you can see, $84 billion up to $97 billion, then a very nice increase to $133 billion in total assets. So they are increasing their assets year over year, which is great to see. And then we're going to look at their liabilities. And of course, Facebook has such a strong balance sheet, they only have $32 billion in total liabilities. So they have over $100 billion of assets that are greater than their total liabilities. So it's very nice to see Facebook has a very strong balance sheet. Another thing here, stockholders' equity, you want to see that increased year over year, which of course we are seeing. We see $74 billion here, up to $84 billion, then of course up to $101 billion. So they are growing that year over year, which is great to see. Next financial statement we're going to take a look at is the income statement. First things first, of course, the top line of the income statement is revenue. This right here, the TTM, is trailing 12 months. So it's the last report they have. So the trailing 12 months on this for Facebook is actually the same as 2019. So I'm just going to scroll over and ignore that. As you see here, we have 2017, 2018, 2019. So what we want to look at on the income statement is we want to see growing revenues year over year, which we see. So we see 2016 cut off here at 27 billion, up to 40 billion, up to 55 billion, and of course then 2019 up to over $70 billion of revenue. Their gross profit follows the same trend, very nice increases year over year. And of course we want to take a look at their operating income, which has increased year over year. We see a slight decrease right here, but that's nothing to be worried about because they have such large operating income anyways. That $1 billion is not something to be too worried about because that just shows that they did spend a little bit more in this year. Moving over, we're going to look at the net income number. And of course, we want net income to grow year over year, which we have seen 10 billion to 15 to 22. Of course, we did see a decline here. They did have higher expenses in this year. But of course, if you notice, they also paid double in taxes in this year. Their income tax expense was double. So that did play effect on how much net income they were able to maintain. So they did have a strong balance sheet. We see net income, we see operating income, and we see revenues growing year over year, which is exactly what you want to see. And they're not growing by a small amount. They have sharp increases in revenue year over year. The last financial statement we're going to take a look at is the cash flow statement. So this just talks about how much cash Facebook is actually bringing into the business year in and year out. So of course, my favorite and most important, I believe, on this statement is cash provided by operating activities. So this is the cash Facebook is bringing in from their day-to-day operations, from the bread and butter of the business, which in a majority of their revenue comes from selling advertisements. Companies pay Facebook to post their ads and promote their ads to Facebook's users across all of their platforms. So as you see here, net cash provided by operating operations or activities we see 24 billion up to 29 billion, and then last year in 2019 was up to 36 billion. So we are seeing that their day-to-day operations are bringing in more cash each year into the business, which is exactly what you want to see. Next part of the cash flow statement actually is the net cash used for investing. So this is money that Facebook uses to invest back into the business. So for a company like Facebook, who is a high growth stock, who has to continue to innovate, continue to research and develop, we want to see that, make sure that their money is actually going towards those projects and it's not being wasted on anything else. So as you see here, Facebook spent close to $20 billion on investing activities. And if you look where that money went, they invested $15 billion into property, plant, and equipment. They spent a tiny bit on acquisitions, but nothing too crazy. And of course, they did purchase investments. So as you can see here, they put money into investments. If you look at their 10K, you can actually figure out what investments they purchased. But overall, that means they were putting money into assets that are going to eventually return a higher rate of return, and of course, make the company money moving forward. As you see here, sale slash maturities of investments. This is the investments they made in previous years that have brought them cash flow in 2019. So this 19 million could have come from 2017's investments or 2018's investments. And of course, that's the money they're bringing in each year from previous investments. So that's okay. This number is negative. It shows that they are investing into different assets within the company. Next is net cash provided by financing activities. So this is cash, because it's negative, they actually used more for financing activities than they collected or brought in. But of course, you can see here, this is nothing too crazy, just over 7 billion. They paid off a little bit of their debt. They bought a tiny bit of their stock. As you can see here in 2018, they purchased a lot more stock than they did in 2019, and other various financing activities. So nothing too concerning there. And overall, Facebook increased their cash position from 2018 to 2019 by $9 billion. So they increased their cash they had on hand. And of course, who knows exactly why they did that? They have their own internal operations that decide or try to determine how much cash they want to keep on hand at every time. But maybe they knew some uncertainty was coming through and they want to increase their cash position. So it's very nice to see over a $9 billion increase in their cash year over year. So before we just end it off here, after we talked about the financials, Facebook is currently trading at a PE ratio under their historical 5-year average. You can see here they have a very strong balance sheet, very nice income statement, and very nice cash flow statement. All their important metrics are increasing year over year, and the company is continuing to grow. One last article I want to pull up here is just something stating exactly what Facebook's actually doing and some innovations they have moving forward. So something very interesting here, the company plans to add a payment platform to both WhatsApp and Instagram in the next 6 months. WhatsApp Pay, which is already in India, will launch in several more countries. Finally, Facebook's VR investments appear to be paying off. Zuckerberg reported that people bought almost 5 million in content on the Oculus store on Christmas Day. So Oculus is one of their VR investment products. So of course, that is something that is a very interesting industry that will continue to grow moving forward. Virtual reality will be a big part of the future, and Facebook is trying to get into that market. So it's very nice to see that they had $5 million in content purchased when this product is still considered new and is not mass produced yet. It's still not in everyone's homes. It's still not out for everyone. It is available for most people, but a lot of people don't own it yet. So it's very nice to see that they are seeing significant revenue amounts coming in from these products that should help the company grow within the future. So we're going to end it off the video here. So I just want to know, let me know in the comments, is it time to buy Facebook? Do you think Messenger Rooms is going to have a big impact on the stock price? Do you think it's going to really compete with Zoom or Google Hangouts? What are your thoughts? Do you think Facebook's actually undervalued like we saw on the analysis here? And what do you think? Are they going to continue to grow at that accelerated rate that we've seen in the past? Whatever you think, let me know in the comments below. I'm going to keep Facebook on my personal watch list and continue to monitor the stock to see if I will start a position in it. So as always, I'm the Gen Z investor. I talk about personal finance and investing. And as always, if you like the video, please like and subscribe. I really do appreciate it. Thank you, and see you in the next one.